Morning, guys. So yesterday I introduced the concept of breakup structures. So let's go through it again and do more examples before we continue. So for your bullish breakup structure, you need to anticipate a push, correction, and a push. Once you have impulse, correction, impulse. Once the origin of that correction is taken, you have a valid breakup structure there. So when is the next one? The same thing again. Correction, correction, impulsive push. That's it. Break of structure below this. Then here again, the same thing. So it continues, it continues, it continues, continues. The same thing again. Next one, correction again. Impulse. That's your break of structure. So you need two valid break of structures. 1, 2, 3. 2. 1, 2, 3 to validate your trend. So once you have two valid break of structures, 1 year, 2 year, the trend is confirmed bullish. So that's for the bullish market. Then for the bearish market, just the flip of it, you have what? Sell, correction, sell. The market below, BOS. BOS. That's it. What do you need again? Little correction and a nice sell again. Once the correction's origin, the candle closes below it, that's the break of structure. Again, the same thing again. Correction, then impulsive push that closes below. That's what the break of structure. So how do you validate it? You need two break of structures to validate the trend. So once you have 2 break of structures, the trend is considered bearish already. Okay, so the RISH. So this is the very basics of how the average SMC trader, ICT, and supply and demand trader sees price. How do they read it? They need breakup structures to the upside, 2, 3 breakups to the upside validates a bullish trend. Then 2, 3 breakup structures to the downside validates a bearish market. So here we have PS1 here. Let me circle them. Let me use this one. That was, we need the first push here. That was the first one. Second. So you need 2 breakup structures, 2 to validate a trend. Here again, broke below here, 1. Broke below here, 2. Once you have 1, 2, 3, BS1, BS2, that's your valid break structure. So let's walk through last week's trade, yeah? We look at this stuff now. We had this impulsive sell here. We had this sell. Market was bullish. This was the last corrections leg. So once market closed below it, like when this market closed below here, now that was our first leg, which was our impulsive push. Closing below here gave us the first breakup structure. Then it gave us a correction, went up again, continued. So here now, we can call it our first BOS. Our first breakup structure, impulsive push, closing below. Correction again, went back again. That's it. So once you have 2 breakup structures, BOS, the trend for that period of time is valid. Impulsive push, correction, impulse. The first impulse gave us the first breakup structure. The second impulse gave us the second breakup structure. And that was it. So we have to name this one now. This was the last correction. The same thing again. Impulsive push broke above the last corrections leg. That can be your first breakup structure. POS here. The market came up, came down again, went up. That's your second breakup structure. Yeah. Market corrected now again, went up, closing above the last corrections again. This is now your third breakup structure. So this trend now is considered a bullish trend currently. But previously it was bearish down here. Let's check for more. Good. You can see here, market was previously bullish. By getting to this point, we had a candle closure below here as an impulsive push, correction, impulse. That's it. So when the previous low is taken and the candle closes below, your breakup structure is valid. Then when you have 2 to 3 breakup structures, your trend is confirmed. Here again, impulsive push, correction. Once it closes below here, that's your valid breakup structure. That's a very valid breakup structure. Yet again, correction, another one again. That's another breakup structure here. I'm making this stuff to be a little very easy, the easiest possible way to understand it. Good. We have this cell closed below here. Once price closed below the last correction, that's a valid breakup structure. Very valid breakup structure, POS. Market comes up, closes below again. That's another break of structure. Looking for very easy, clear, exactly. Here again, we had this push, correction, push. It was valid when this low was taken. So this now is your BOS1 here. BOS1 there. Corrected to the upside, close below again. Second breakup structure. Okay. So that's it, guys. So in the next video, we'll talk about inducements and how to mark it. Here again, impulsive push. Close above here. As a breakup structure. Corrected, it went up again. Breakup structure. And that's it. And this is a bullish market. All right, guys. Till next video.